Picture the house you have been waiting for. The kitchen is renovated. The backyard is fenced. There is a wide strip of grass behind the patio where you are already imagining a pool, a shed, maybe a guest house. Then, 3 weeks after closing, someone tells you the fence is in the wrong place. Not a few inches wrong. The fence, the patio, and part of the driveway sit inside a recorded easement, or across the actual boundary line. You call the title company. They pull out the file. And there it is, a paragraph in the title commitment, under a heading called Exceptions. The problem was not necessarily missing from the paperwork. It was just written in the one part almost nobody reads before signing. That is how a title exception can cost you your backyard. When people hear title, they often imagine ownership, who owns the house, whether the seller can legally sell it, and whether there are old liens attached to it. Those questions matter. But title also describes the rights other people, utilities, governments, and neighboring owners may have in or around the land. The document you receive before closing may be called a preliminary title report, a title commitment, or something similar. The format changes by state, but the basic job is the same. It tells the proposed insurer what interest is being insured, what must be fixed before the policy is issued, and what the policy will not cover. The important distinction is between a requirement and an exception. A requirement is something that may need to be satisfied before the final policy can be issued, paying off an old mortgage, recording a deed, clearing a lien, or providing a missing document. An exception is different. It is an item carved out of the coverage. It may be a recorded easement, a restriction, a lease, a mineral reservation, a survey matter, or another right that remains attached to the property. An exception does not automatically mean the seller does not own the property. It means your ownership may be subject to someone else's recorded right, and that specific issue may not be covered by the title policy. The Consumer Financial Protection Bureau explains that an owner's title policy can protect a homeowner against certain pre-existing claims to the property. But the coverage depends on the policy. If the problem is specifically listed as an exception, you may be dealing with it outside that protection. And there is another distinction buyers miss: lender's title insurance protects the lender's loan. Owner's title insurance is the policy designed to protect the buyer's financial investment. One does not automatically substitute for the other. An easement is a legal right to use part of someone else's land for a specific purpose. A utility company may have a right to run lines along the side or rear of your lot. A municipality may have a drainage corridor. A neighbor may have the right to cross a strip of land to reach a garage or a public road. You can still own the ground. But you may not have unrestricted freedom to build over it. That matters because the backyard projects people care about, fences, pools, decks, additions, retaining walls, and sheds, are exactly the improvements that can interfere with an easement. Some easements are routine and have little practical effect. Fannie Mae's conventional loan guidance, for example, recognizes certain minor utility easements and some joint driveway arrangements when they do not interfere with the property and future owners retain usable rights. That is not a blanket approval for every easement. It is a reminder that the question is not simply, is there an easement? The question is, where is it, what does it allow, who benefits from it, and does it interfere with the way I plan to use this land? A shared driveway can look completely ordinary. Two houses use the same pavement. Everyone gets along. The listing calls it private access and moves on. But the recorded agreement may control the expensive part: who repairs the surface, who clears snow, who pays for drainage, what happens if one owner refuses, and whether the agreement binds future owners. Private road agreements can create the same problem. A mortgage underwriter may want a legally enforceable, recorded arrangement that explains maintenance responsibilities and remedies if someone defaults. If the agreement is vague, expired, unrecorded, or limited to the current owners, the issue can affect financing, resale, and your ability to use the access you assumed came with the house. A title search is mainly a records exercise. It can find documents that were recorded. It does not automatically measure every fence, patio, driveway, hedge, or retaining wall on the ground. That is where a survey matters. The title file might contain a broad survey exception, language saying the policy does not cover matters that an accurate survey or physical inspection would reveal. If the fence is in the wrong place, the title search may not tell you. A survey may. Fannie Mae specifically warns lenders about unacceptable title impediments, including certain survey exceptions, and requires easements and encroachments to be considered in a property's marketability. In plain English, a boundary problem may not stay a private argument between neighbors. It can affect the loan, the value, and the next buyer's willingness to take the property. Imagine a house on Maple Street. The title commitment lists 3 items in Schedule B: a utility easement along the rear boundary, a recorded agreement for a shared driveway, and a general exception for matters a survey would reveal. The seller says the backyard is fully usable. The fence looks straight. The driveway has been there for years. The buyer skips the survey because the lender does not require one. After closing, the buyer learns that the back patio extends into the drainage easement, the fence crosses the boundary by several feet, and the driveway agreement requires owners to split major repairs. The buyer cannot simply assume the title policy will pay for moving the fence or rebuilding the patio. Those physical use questions may have been accepted, and the remedy may depend on the policy language, the recorded documents, state law, and the facts on the ground. Nothing about that scenario requires a fraudulent seller. The house can be honestly listed, the title search can be competently performed, and the buyer can still end up owning less usable backyard than they thought. First, ask for the complete preliminary title report or commitment, not just a one-page summary. Second, read the legal description and the exception section. Look for words such as easement, right-of-way, access, drainage, utility, restriction, covenant, survey, encroachment, party wall, shared driveway, lease, mineral, and possession. Third, get the documents referenced by the exceptions. If the commitment cites an easement by book and page or recording number, ask for the actual instrument. The heading may be vague, the recorded document contains the rights and limits. Fourth, ask whether there is a current survey or plat. If there is not, ask your title professional, lender, and, when the property or proposed use makes it important, your real estate attorney what type of survey is appropriate. A boundary survey, an ALTA/NSPS survey, and a subdivision plat are not interchangeable in every situation. Fifth, walk the property with the paperwork in hand. Compare the fence, outbuildings, driveway, deck, pool, retaining wall, utility boxes, and visible drainage paths with the survey or plat. If the listing promises a future addition, check setbacks and easements before you treat that space as buildable. Sixth, ask the title company a direct question: which exceptions could limit my use of the backyard, access, or future improvements, and will any of them be removed or affirmatively insured? Ask for the answer in writing. Seventh, protect the timing. Your purchase contract may give you a limited period to review title and survey results, object, request a cure, renegotiate, or cancel. If you let that period expire, your options may narrow sharply. Have a qualified real estate professional review the actual contract and the law of your state. Before signing, you should be able to answer 7 questions. What exactly is the legal description of the land? Which exceptions affect the backyard, driveway, access, drainage, or future construction? What does each recorded document actually allow? Are the fences and structures inside the boundary lines? Who pays for private road or shared driveway repairs? Which items are covered by the owner's policy, and which are excluded? What is the deadline for objecting or walking away? The title report is not a guarantee that the property is perfect. It is a map of the rights and risks attached to the property. The most expensive mistake is treating an exception as boilerplate before you know what it touches. Because the backyard you imagine buying is not always the backyard the documents give you. Before you sign, find the exception, and find out what it costs you.